So, gentlemen, first question. Why is DeFi important for the leadership of the US financial system in Web3?
Yeah, so in my view, DeFi basically is the place where you have innovation to make new financial products. I think the thing that people don't fully realize is that part of the US's dominance in the internet is based on two things. The first thing is that the US was ahead on internet infrastructure by 5 to 10 years of other countries. And that's why you had things like interactive brokers and E-Trade and all these types of things coming out of the US system. And then the second thing is that you can actually compose a new financial product that can actually provide real world value and launch that with a few people. I don't know exactly, I don't remember exactly how many people were at ETHLand.
One.
One, okay. But one, okay.
Not anymore, but in the beginning.
But one, and then, so one, that's all it takes, I guess. So that's pretty impressive, right? So I think if the US wants all the future financial innovation, it needs to it needs to provide the internet level infrastructure that it did at the internet, but in the Web3 world. And then it needs to enable these small innovative teams to make those products within the US financial system. And that'll result in both new exciting products, and very importantly, it'll result in distribution of US issued assets. Because what DeFi does best in many cases is it creates distribution for those assets on a global scale, which means that there's net more global demand.
Yeah, I agree a lot of what Sergey said, and I think like one key element about decentralized finance is it's an open infrastructure to innovate. So I think a lot of the financial rails or financial innovation that we have today is quite limited, and there's very little that you can actually go and innovate and build something new. And what I like about decentralized finance is that it has the same perspective for financial technology as you will build any other open source systems. For example, if you take an example like operating systems, the whole world is relying upon Linux, which is an open source community-built operating system, and used by most of the servers across globally, and basically used for mission critical infrastructure. And the way I see from decentralized finance perspective is that you first time ever have an environment where you can actually innovate, build innovation in the most transparent way by the people, to the people, in the sense that you can actually have a voice and actually a dialogue with community members that are also building this infrastructure. And I think there's some certain components about blockchain that makes it just really perfect for financial transactions. Obviously, the way that decentralized ledgers work by themselves, but the whole concept of smart contracts is extremely fascinating, because it means that you can actually build execution for financial transactions, and you don't need to rely single point of failures or trusted entities to rely upon execution. You actually can program as a resilient financial infrastructure, resilient financial applications, whether it's some sort of stable coin, whether it's lending and borrowing, or just exchanging value across the world, essentially. And why this is important from the US perspective is obviously the innovation aspect, that the more innovation can actually happen from here, the more products we can get on chain. And on chain means on the blockchain, and it means that the blockchain becomes a distribution channel across the whole world. So I believe in the future where the backend of finance is based on decentralized systems and decentralized networks, where the businesses are built on top of these networks. And this is an incredible opportunity for anyone who is young and wants to innovate, create programmable finance, and bring assets on chain and distribute across globally. And there is now a big opportunity to do so, and I think DeFi is also maturing. So as of today, if you think about the technologies that we built with Sergey. If you think about Chainlink, you have a way to bring trusted data on chain. You have protocols that have billions of worth of dollars running smoothly and running resiliency in a resilient way. So I think we're still very early in this journey of moving from paper to digital to blockchain transactioning. And this is why it's important for US.
Yeah, just one last thing. I was just thinking as you were talking. I mean, what's kind of amazing is me and Stani, we've built separate building blocks that when you combine them, you make something like a JP Morgan, right? But the funny thing about that is that neither me or Stani would ever be able to work at a JP Morgan in all likelihood. Sorry, Stani, I'll speak for you here, unless you want to disagree. And there's a lot of...
I agree.
But there's a lot of people like me and Stani who can build a lot of innovative next level stuff. You know, how much is in Aave right now? It's like 20, 30 billion?
30, 35 billion.
30, 35 billion, and it was more than that before. Stani has built a system that secures more than, you know, most US banks except for the top 4 in many cases, right? And you did that with a team of how many people?
Very little. We're talking about like, as of today, probably like a few dozen, but very little.
Okay, so less than 100 people. It takes 100 people at JP Morgan to verify an identity for 3 weeks or something, at least. And that's fine, and it's good, and it's the right way to do it before. But, you know, like, that's what we're talking about. Like, to just clarify my answer, it's just, you know, the next people like Stani and what I do in relation to Stani and Aave is, I'm like the JP Morgan IT department, where I make sure that, you know, the data flows into his financial products and cross-chain works and all the things work. That's like an amazing thing that these separate groups can come together and they can successfully secure tens of billions of dollars and provide reliable, high-quality yield to anyone on the internet. That's not possible 10, 20 years ago. In the next 10, 20 years, it's not going to be tens of billions, it's going to be hundreds of billions. And the US financial system wants that in the US financial system. Just like you wanted the internet entrepreneurs in the United States building the US-based, US-issued internet systems, you know, like Facebook and Google, right? US would be a different place and in a different economic position if Facebook and Google were built in Europe and China. That's what we're talking about. It's a very serious thing for the US and its future.
I could quickly add that the actual competition in decentralized system is probably even more fierce than building traditionally on online, for example, or if you think about manufacturing, because DeFi is a lot about building algorithms that then serve billions of people down the line. I mean, I hope that it will serve. And that means that any single individual who are smart enough and capable enough can actually come and contribute and build these algorithms. And it's a fierce competition, and I think being able to provide the best tooling, the best environment for these developers will actually empower a lot of that innovation, which is going to happen across globally. So there is a lot of good innovation happening on DeFi from US, and the more there's clarity and opportunity and the less there is actual risk to contribute and participate, the more we actually see smart people coming into this space and innovating.
I think, first of all, well said, both of you. I think the power and value of DeFi is pretty clear now after these comments. One of the things that is not so clear is how do we comply with existing regulation in DeFi. So to you, Stani, what does a great DeFi product that does comply look like?
Yeah, I think one of the challenges, obviously, with compliance is that it's very localized and there's different kinds of institutional requirements. What we noticed recently is that there's a lot of actual institutions that find and are finding and exploring the benefits of decentralized finance and smart contracts and all those things that are built around proof of reserves and thinking about the concept of tokenization. Now, tokenization is a simple exercise of where you have existing value that you basically reflect on chain. It can be as simple as stablecoin like USDC, or it can be a tokenized fund, or it can be pretty much anything you want to desire and has some sort of economic benefit to it. And seeing more of the interest in tokenization, we recently launched a initiative called Horizon from Aave. And the idea is to combine these two worlds where you have tokenized assets, so we call them RWAs, that can be used as a collateral. And typical RWAs today are money market funds that are tokenized and accessible to eligible users. So that means that only these eligible users are able to access to that infrastructure and use these assets as a collateral to borrow liquidity. Now, why this is important is that today we're dealing with money market funds that are tokenized, but tomorrow we can deal with any value. So, for example, if you think about global distribution, you might find, for example, credit across the world that can be tokenized, and DeFi can be used as a backbone to actually extend credit, extend liquidity for these assets. And why it's fascinating is because we are looking at the compliance requirements that and institutional needs that we have today, and still using them in a new setting and just changing the substrate of these transactions. So previously these transactions were transacted on paper, electronically, and now they will be transacted on chain. And I would say that paper is unreliable, but so is digital. There can be all kinds of mistakes in databases, as we've seen in the past. So that's why it's quite important to find a model that works for institutions and works also to use this new infrastructure. And then you can use technology like proof of reserves that, for example, Sergey and Chainlink team has been building, where now that you have all this value on the blockchain, you have to somehow verify this value. How can we trust that, for example, a specific fund that is issued from US has the underlying assets, has the underlying balances, and you can make those verifications and prove them on the blockchain as well. And that creates a really transparent, efficient environment to create financial transactions.
I think that's a huge leap forward. One of the things that DeFi does so well is it lowers the barrier to entry for users. In traditional finance, there are quite a few hoops you have to jump through, onboarding yourself into a new bank account, financial institution, a lot of KYC and AML checks. But in this day and age, we have decentralized identity solutions. How could those decentralized identity solutions help DeFi comply with KYC and AML while preserving privacy better than in traditional finance?
Yeah, sure. I think the issue of compliance with AML, KYC, and identity basically boils down to a few problems. One problem is a lack of clarity of when you've met the standard for AML, KYC compliance. Another problem is that everybody has to re-verify an identity to accept it into a transactional flow. So because there isn't always clarity on whether you've met the AML, KYC requirements, some people overdo them and some people underdo them. This creates what might seem like an average. It seems like that averages out, but it doesn't average out, because the people that want to avoid AML, KYC compliance, they know who does it more than they should, and they avoid those people. And then the people who do it less than they should, they seek them out through a system of lawyers and accountants and whoever. So you're not getting the average between these two groups. You're probably getting pretty close to the weakest link in the AML, KYC compliance process. And then the cost of re-verifying every identity every time for every participant in every step, everyone in every pool, basically fundamentally just increases the cost, right? It just increases the cost of a transaction. It increases the cost of participating in a liquidity pool. It increases the cost of acquiring an asset. It increases the cost of reselling that asset. That's not good, because what it means is it's friction, right? The people who made the assets, they don't want lots of friction. They want to comply, but they want to comply with, minimal friction for their users. So the way that I see this being solved to the benefit of good systems like Aave's Horizon, which is, in my opinion, a very good example of a system that is doing these compliant institutional transactions the right way, is by making a verification of identity that is technically verified so that it meets the standards of AML KYC verification through technical means. So we've technically verified that you are a citizen of this state, or you're a resident of this state through the government database. Then we technically verified your identity against the OFAC database. And then with your permission, we technically verified that you have over $1 million in your bank account. And now you're an accredited investor, right? So now you have this accredited investor status on chain, and all the other participants can rely on that accredited investor status on chain without re-verifying you. Right? That's basically what you want to arrive at. And what that does is it massively reduces the cost of a transaction. And what that does is it allows two things. The first thing that it allows is systems like Aave's Horizon to be more easily usable, which benefits their user experience and benefits their system, while still at a higher level of compliance than those people at the bottom of the compliance spectrum. Right? So it's a higher level of compliance we've achieved. Because it's much, much harder to manipulate a record in the DMV database than it is to pay some guy in some bank to, fraudulently do whatever with you on some transaction. And then the second thing that it does is that whatever assets go into Horizon, whether those assets are backed by JP Morgan things, and just to be clear, I'm a fan of JP Morgan. What I meant before is that they won't hire us. I don't think that's what I meant. I don't know. That's my self-derogatory. I don't know. Maybe they'd hire Stani. Me, I don't think I'd be able to get it. But in any case, so let's say there's a JP Morgan asset, right? And the underlying JP Morgan asset is now kind of seeking what its demand is. If the friction and the cost of identity compliance and acquiring that asset is low, then the Aave Horizon user is more likely to buy it, right? So the lower you make the cost of identity compliance, the more you reduce the friction for international capital to buy that JP Morgan issued asset. Does that make sense? So basically, identity compliance, AML KYC compliance, various other forms of compliance around proving capital reserves, proving whether an asset exists. I think we're kind of in a unique place now where we can automate that. We can automate compliance by connecting all of the data that compliance departments usually check directly into the smart contract. That's basically the idea, right? Instead of having somebody go and check the state database and put it in an Excel sheet, then that Excel sheet updates some database, then some other guy does something else, you can automate that. And then you can prove that the thing you automated worked correctly because you can prove that you verified the right API. So the level of fraud and mistakes actually goes down. So it's great. That's the answer.
And a lot of cost comes from for example, the aspect of fraud and I just think that the kind of like a transaction cost and savings aspect is a little bit overlooked when it comes to blockchain and the benefits. So we've talked to a lot of teams that are issuing today real world assets, bringing funds onto the blockchain, and quite commonly they use also the blockchain as the transfer agent ledger as well. So they have kind of like a double system, and at some point you reach a point where doing directly on chain is gonna net for cost benefits, especially once you scale. And I think down the line, at least from my vision perspective, is that I would like to see where DeFi is in a place where actually you have that end-to-end full transparency where you can actually quantify the whole systemic risk of financial infrastructure within DeFi, basically on chain, and that way you can actually quantify the risks of the whole system and price it accordingly. So it's a lot to do about removing that information asymmetry, giving everyone the equal access to financial opportunities and the equal access to information and full transparency. And that way you actually can create real inclusion, not just inclusion for sake of inclusion, but actually that you put every single entity and a person on the same line for financial opportunities. And I think that's going to be a really powerful driver, because I don't think there's any other technology, for example, as of today, that you could distribute, for example, donations across globally just with internet access and a wallet. So it's very powerful. I think we're still not there yet for that type of adoption, but that's the path we can go. And what it means effectively is that we can have a financial system where everything is very transparent and you can see the history, the provenance of these transactions. And that's where things like compliance becomes more easier, because you can actually rely on common systems. As of today, for example, in Horizon, we're trusting the issuer's compliance, but in the future, there might be systems in place where some of these compliance checks can be shared to a certain extent. So there's a lot that can actually happen on the cost savings perspective, reducing information asymmetry, and just pure empowerment and inclusion as well.
I think that's a significant advancement in the future of finance and the future of society and how we interact with capital, how we raise capital. I think this is all incredible, and it's no wonder that there's such a surge of institutional activity kind of flocking to DeFi. Traditional financial institutions we're seeing more and more are getting into DeFi, and we think that is, the best way to move forward is a decentralized financial system. Last question for you both. We have only a couple of minutes left. We need government help, I think, to help us unlock the full power of DeFi and decentralized networks. In a few words, what is needed from the U.S. government to help DeFi come back to the U.S. and grow here?
Yeah, and in my view, what everybody who makes financial products want, and we power the majority of DeFi, and we also have probably the largest collection of various transactional flows in the capital markets today across different stages of POC pilot and production at the same time. And it's really interesting to me as I work with both of these groups, how in some ways they're different, but in some ways they're very similar. And they're very similar at like the most fundamental level. And at the most fundamental level, what everybody wants is a sense of safety, right? The guy wearing the suit in the bank wants a sense of safety and predictability, that they won't go to jail, that their compliance department won't have a problem with them, that it won't be a nightmare for them. And the flip-flop wearing DeFi person has the same fundamental instinct, right? Most people, in my experience, that can make high-quality financial products don't want to not comply, right? They want to comply. Stani and Aave have an entire product that's a subset of their product that's made very purposefully to comply. You've seen a lot of the biggest people in our industry here speaking on stage and remotely because they want to comply, right? So the nuance here is not that people don't want to comply, it's that when there is no clarity on compliance, the risk that everyone has is that at any moment, I could just make up whatever I think compliance is, and I could apply it to you, right? So one day, you step out of your house on the right foot, and that's right, and then the next day you step out on the left foot, and that's wrong. And what were the rules? Well, the rules were we changed it 10 minutes before you stepped out of your house because we did. That's a level of risk that most human beings just don't want to deal with. And that's why people fundamentally don't want to be under certain regulatory regimes in certain jurisdictions and so on. And so if the US wants all these teams to come back, and the US wants all of this innovation to happen within its financial system, it needs to make it very, very clear that when you step outside of your house, you got to do it on the left foot or the right foot. I mean, maybe the right foot's better than the left, I don't know, but like there has to be some kind of clarity here, right? So that people can actually comply. Now, what that clarity is, ideally, can leverage the advantages of the blockchain and the advantages of proof of reserves and the advantages of automation of compliance to prove what is actually going on in a way that reduces the friction and reduces the costs, right? So I don't think necessarily the right approach is take everything from the old system and just jam it into the new system. I think when you define how the new system works, you have to take into account how it works. So I think you need this predictability and clarity for people to be comfortable making financial products. But I think when you define how they have to make those products, you take into account the nuances and the new capabilities of how and how the products are actually working, rather than making some kind of regulation that doesn't really apply, that's like tone deaf. I think those would be the two principles that I would keep in mind.
I
Very
totally
briefly.
agree on that. I would say also that talking to the developers in the ecosystem is very important, because seeing kind of like the regulation that has happened, for example, in Europe with MiCA, a lot of that regulation has been based on also things that have been ideas like Libra that hasn't been actually even built, while there's other types of stablecoins that have grown in the DeFi ecosystem. So talking to these developers is really important, and I agree fully that it's more about how do we actually create a clarity that what you can actually build in DeFi and what is okay, because just giving that green light, that by itself will attract a lot of innovators. There's a lot to do in the space, and I don't think we even finalized the first chapter of this whole book. And if you do that, we're going to see a lot of innovation happening right here.
Gentlemen, thank you so much for such a thoughtful conversation.
Thank you.